Hey everyone, this is Ed Keim, CEO over at Quantcha, and welcome to week one of the Quantcha Challenge. It's May 1st, 2015, around 1 p.m. Eastern Time, and we're going to dig into our first couple trades. We're going to start off by taking a look at our current portfolio, which was opened about a week ago with $10,000 in cash. I'm proud to say that we've shown a profit so far as we are now up 1 cent based on the interest collected over that week. However, we have no other position to speak of, so let's dig into the bull and the bear of the day. The bull of the day is Merit Medical, which is recently trading around 1985. The stock is a Zacks rank #1 stock, meaning it's a strong buy, and they make single-use medical products of high quality and superior value. But even better than that is they've had lots of good news for investors lately, including upwards earning revisions for the current year from 79 to 87 cents a share, and for next year even from 94 to 98 cents. And if that's not enough, they also beat their most recent earnings expectations by 3 cents per share. Now let's see how we can use Quantcha to find a great options trade for Merit Medical. From the home page, I'm just going to click Get Started to get to the Quantcha dashboard here in the options search. I'm going to type in the symbol, which is MMSI, and we're going to take a look at the expirations. Now the first thing you'll notice here is there's not a lot of expirations for this particular stock. So if we go out about 2 weeks, we'll just take a look real quick. We'll search the options, and there's no default trades available for the range that I had. What I'm seeing here is would look like a fairly limited number of options. So if I select the option chain, we can see that there aren't a lot of options here for us to work with. And if we take a look at the bid and the ask, you see a huge spread in a lot of these that are available. So that kind of indicates that we're not dealing with a lot of liquidity in this particular stock. So we're probably better off not taking a short-term trade like this. The Zacks rank indicates a bullish sentiment on the stock, but I think we could probably go out to, let's say we go out to the June time frame, and let's take a look and see if we can do a little better on the trade options here. We can see there's an extra put option that's available. Still, virtually everything's in the money, which kind of limits the flexibility we have. But let's go over to the search results. And I'm going to set for budget here. We'll start off with, let's say, probably about $500. We're not going to be too aggressive on the trading here, just because of the fact that liquidity is not great. So if things go sideways and we want to get out of it, it's going to be tough. I'll also select Tradier as our brokerage, so we have all the fees and stuff modeled in, and we can click through to place a trade. Now you can see there's a reasonable volatility over this time frame, and since we're bullish, we'll start with a range preset that is, let's say, moderately bullish. And I'm actually going to pull this up a little higher just to see how we can do if we go up to, let's say, give ourselves about a 15% upside, and we'll apply the terms to see what we're looking at for trades here. Now you'll notice that virtually all the trades here we have, there's nothing that at least breaks even that always breaks even within our range. So we're kind of taking a flyer here on this stock based on the limited liquidity. I think that the best call we have here is to probably go for a long call like this. So if we take a look at where the stock is right now, the stock's trading at right under $20 a share, and if we look at going out at about $20 for, or at a $20 strike for these particular options, we're looking at a break even at a little over 21. So that's not too aggressive in terms of growth. We're expecting some development here. So that's about 6 or 7% growth that we need in order to make a nice profit on this particular trade. So we'll probably just stick that out here and take advantage of what we can and hope that the bullish call works out to our favor. So we're going to keep this as is and go ahead and just place the trade. I'll have this send us out over to Tradier. You'll notice that we have our profit already, which is nice from the interest we got from opening the account a little earlier. Of course, we're setting up with just market orders here, and we're going to say for the day, I'm going to go ahead and preview the order. We can see all the details laid out for us. We're looking at a $425 total cost to open the position, and then we're going to go ahead and submit that. And so probably expect that to be filled relatively quickly. So let's switch back over and take a look at the bear of the day. Now, when there is a bull of the day, there's also going to be a bear of the day. And the bear of the day today is Las Vegas Sands. It's recently trading at 52.78. This is a Zacks rank #5 stock, meaning it is currently slated as a strong sell. They are a hotel, gaming, and retail mall company that missed the most recent earning calls by 8 cents a share. The expectation was 74. They came in at 66. But the bad news is even worse because they also cut their dividends significantly from $1.50 a share to 50 cents a share. So picking up where we left off in Quantcha, let's take a look at how we can trade Las Vegas Sands from a bearish perspective. I'm just going to type in the ticker up here in the search box and hit the search. And this will bring us to the view, kind of the overview for the stock, where we can get an idea of the quote and the company. You can see some pretty bearish performance over the past few time frames here. We've also got some interesting correlation data to look at with some of these other stocks in the casino space, or in the gaming space, I should say. And we've got a lot of options here that we can trade, which is great. And we're going to go out. Let's take a look at the. We'll take a look at the June monthlies at this point. Actually, we're going to come in a little shorter. Let's come in at the May monthlies. We'll make this kind of a shorter term trade. And we click search options, and now we're kind of getting a good view. We can see the default range is fairly neutral. It's actually by design that we get a neutral range the first time we look at something. Now the first thing I'm going to do is I'm going to set my range preset to be moderately bearish, and this will pull down to about a break even, down to about a 6% loss, or a 7% loss in this case. And I'm going to nudge this up a little bit. I'm going to allow for a little bit of potential movement. I mean, even though there is a general bearish point of view, there's some fluctuation in the stock over the next 3 weeks that could potentially work against us. So we'll say we'll come in at about a 7% loss up through a 1.5% gain. And we can see this is a pretty good probability of that based on the current option pricing. We can see that there is still quite a bit of optimism among a lot of people here, with this call break even being as high as nearly $60 a share. But there is also some good bullish sentiment or bearish sentiment that should work in our favor here. And we can see there's a lot of volume in the puts in the lower frame. So if we actually hide some of these guys, we can see that the current volume of puts is outselling the volume of these calls up here. And we're going to probably put in a little bit more money behind this trade. We'll go up to $1,000 as a baseline investment for our budget. This budget number makes sure that whenever we get trades, as I hit apply, Quantcha is going to make sure that it calculates the right number of legs for us. This way, you can see in the case of debit trades, we're never trading over the amount to open the position, so our risk stays under that $1,000 mark we set. And if there were any credit trades like this one here, a huge credit opportunity, but still the liability for the trade is under $1,000. So we've got that. Now, we don't want to get too aggressive here with trying to be range bound. So I'm going to exclude the range bound strategies and see what we have to work with here. And there's some good ideas. We can see that the stock's trading at 52. This one looks like it breaks even right around, I'm going to say, maybe $53, which is pretty nice. But let's say we don't want to see any trades where we don't at least break even within this range that we've defined up here. And we can see there's a pretty attractive opportunity here for a bear call spread. This is a credit trade where we're going to sell 10 of the options at the 53 strike, and we're going to buy 10 of the calls at the 54 strike. So the lower strike for calls are going to be more valuable, and therefore we're going to be able to get a nice credit for them, and then we're going to hedge the upside, or hedge the downside I should say, in case the stock moves up too quickly with these. So if we click through, we can get an idea of the profit and loss, or the payoff for what we have for the stocks that or for the position we're looking to open here. We could see the break even that we're looking at, if we come over to the full range, is 53.56, which is pretty good. It's a little bit out of the money, or like we were looking at for the current price of the stock. It's right above the upper end of our range here. So we're definitely saying that if our range proves to be true, or even if it continues to go further down below what we're looking at, we should still be able to bank a nice profit here. So this seems like a fairly good risk to take at this point, especially since we're believing in the thesis we've got from Zacks. And so I'm going to go ahead and place this trade. So I click place trade. It's going to send us over to trade here, pre-populating legs for us and the options and everything else that we need to have. Just say that we're looking to make a market order, good for the day. We'll preview the order to get a good feel. Total debit for us to enter this position, or rather the total position we're entering here is going to be a $947 cost. Or rather, this is some of the risk we're looking at here. So let's go ahead and submit this trade. Like I said, we're using market and day. So we'll submit it, and there's an error, so hold on one second. We'll preview that again and give it another shot here. And our order's been submitted, and here we go. We'll take a look and see how this comes through. Oh, and there we go. It's complete for us. We can see we've got it in our positions now, and we've finished our trades for this week. So now that we've got our trades placed and closed, let's take a look at our portfolio at the end of the day. Here we are. We've only got two positions open. The first one was our long Merit Medical call. This is for the time frame out in June, and we've also got our bearish call spread that was set up for Las Vegas Sands. At this point, of course, we don't really have any gain or loss. It's these trades have just been placed, but come back around next week and we'll take a look at how things are doing and place a couple more trades. And if you got any questions or feedback for us, please hit us up at hello@quantcha.com or leave a comment down in the comment section. Thanks and happy trading.